Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back. You're still tuned into Power Breakfast this Monday morning. Well, on to Dalal Street. Weakness persisted in the markets on Friday as the benchmark indices ended lower for the fourth session in a row. The Nifty breached the 10,600 mark, the Sensex breached the 35,000 mark, and the mid-caps too breached the 19,000 mark. The Bank Nifty also ended around 200 points lower in the red. So what are the cues today? Sonia joins in to tell us what we need to watch for. Sonia, morning.
Hi, good morning, Ekta. Thanks a lot for that. Well, you know, for the market, as you've just been pointing out, it's been under a lot of pressure after the political outcome that we had over the weekend. It seems like there could be some more pressure on the index today. As we know, the BJP failed to prove its majority on the floor of the Karnataka Assembly. So now we have the Congress-GDS combine that will form the government in Karnataka. However, I think the market was factoring a lot of this in. If you've seen what's happened since the 15th of May, the Nifty has lost about 340 odd points, and a lot of experts believe that some amount of the political uncertainty has already gotten priced in. Having said that, there are still a lot of global headwinds that this market has to react to. Crude continues to remain elevated. In fact, it was the 6th straight week of gains for Brent crude that we saw. And now Saudi Arabia has made an assurance on the oil supplies after India went and complained about rising prices. Not just that, the US 10-year bond yield continues to remain elevated. The dollar index has surged quite a bit. So it seems like there could be a bit more pressure in our markets in the initial hours of trade.
All right, Sonia, thanks a lot for that. Individual stocks, I'm sure you're watching a lot of them.
Well, yes, Ultratech Cement will be in focus, as we have been saying that the deal to acquire Century Textile Cement business is done. It seems like a lucrative deal for Ultratech Cement, so I expect the stock to be in the green today. They will be getting 11.2 million tons of integrated cement capacity and 2 million tons of grinding capacity, so that's a stock to look at. Ashok Leyland was a stable set of numbers, no great surprises either way. The revenues were up 34%, the EBITDA was up about 50-odd%. Amara Raja Batteries was actually a mixed set. Although the revenues were good, it was the margin pressure that disappointed the street. The gross margins have fallen 180 basis points quarter on quarter, and you know, this is despite peers like Exide doing well, you know, despite having higher lead prices. So it seems like today Amara could be under pressure. Maybe you could see some more buying in Exide because numbers were far better. Couple of other stocks. Thermax, it was an operational miss. There was quite a subdued top line that the company saw this time around. And a couple of more stocks results today. You have DLF, Colgate, Future Retail, Petnet LNG that will be coming out with their numbers. And there's a new listing as well. The NBFC company Indostar Capital Finance will list today. Remember, it's almost a 1,850 crore IPO. Back to you.
Okay, all right, Sonia, thanks very much for that. Well, on that note, let's get in some opinion from the head of equities at Fidelity International on the road ahead for the Indian markets as well as the bond yield volatility.
Yes, there will be volatility, but can we really see bond yields moving way beyond the current levels given the headwinds we're facing? So I think actually that tactically the fixed income space probably looks reasonably attractive right now, and I would consider that, you know, whatever's happening here is more volatility than really a fundamental move away from the levels we're seeing.
All right, so that was a roundup of all the stocks that you need to watch out for in trade today, as well as the way the markets will move. With that, we'll slip into a short break, come back, we focus on some more news and cues for our markets. Welcome back. Let's go to an exclusive news break coming in from the policy space. The government officials tell CNBC TV18 that the Finance Ministry, they've expressed concern over the fiscal impact of the new minimum support price regime. Sapna Das filed this report earlier with all the details.
Well, clear estimates coming in by Niti Aayog as far as the mechanism for the new MSP is concerned. Two options which are under discussion between the centre and states: the market assurance scheme, where the Niti Aayog estimates indicate that the annual cost to the exchequer would be 40,000 crores. So that's a big number that we're talking about. The other is, of course, based on the Bhavantar model of Madhya Pradesh. Here the cost is expected to be lower, probably below 25,000 crores. We are also given to understand that probably, you know, some of the states will like to opt for the market assurance scheme and the rest crops might like to go for the Bhavanta model, which is also called the price deficiency payment scheme. Well, so if that's the case, then the annual cost to the exchequer may be around in the region of 30,000 crores. But obviously, protecting the fisc is a big concern with the finance ministry. So they have red flagged these numbers with the agencies through the agriculture ministry. The expectation is now that Niti Aayog is doing a quick rework on these numbers. They're expected to come back soon on this matter. And after that, a decision is likely. Let's keep in mind that, the government will also have to go to the cabinet. Basically, the ministries will have to go to the cabinet to seek an approval on the same. Having said that, we are given to understand that pulses will be a big focus under the new MSP mechanism. Not really sure about the other crops which may be covered. Mr. Jaitley had made the statement amply clear in his budget speech. He had said that most of the items most of the crops under Rabi are already at an MSP of 1.5 times. So the same principle now needs to be adopted for the rest of the crops. But let's just keep in mind that rice and wheat, of course, will be out of it because the MSP on that is already at 1.5 times the cost of produce.
Okay, all right, Sapna, but thanks for that. Well, let's listen in to what Soumyakanti Ghosh, the economist of SBI, had to say on the finance ministry's concern.
There has to be a decision on the part of the highest stakeholder in the government to ensure that it is only related to those crops where there is an indicator market price. The MSP is lower than the market prices.
Okay.
Otherwise, the overall cost will multiply if you keep on adding incrementally the crops under the scheme.
All right, but higher crude prices, they're being passed on by increasing retail prices of petrol and diesel. Remember, petrol and diesel prices are at record high. The word that's coming in from the Economic Affairs Secretary is the fact that the excise cut on fuel may be put on hold to protect the fisc. Hear him out.
Any increase in oil prices definitely has a lot of impact on our economy. If the prices go up, obviously this will have impact. But under different scenarios, we see the impact ranging from roughly about $25 billion to maximum about $50 billion in a year. Additional, maximum. Under the impact on oil might influence what the CAD will also impact. You've seen some of the price adjustment, right? On the oil prices. What does that indicate to you?
That indicates the prices are going up without the excise coming down.
That's what you should read. That's what it means.
So are you ruling out an excise cut?
No, I don't have to say anything on that. Just watch what's happening.
Okay, time for a break now. But up next, Colgate and Future Retail will be reporting their Q4 numbers today. Expectations on the other side. Welcome back. Well, on to some earnings expected today. FMCG major Colgate will be reporting its Q4 numbers. Mangalam, what can we expect?
Well, the street is working with a good set of numbers for Colgate this time around, and if you take a look at the stock, it's at a record high for after not doing anything just a week ahead of the results. The stock has been up about 12%. So a lot is perhaps in the price. We'll keep an eye out on what happens in the results today. So the revenue, we're seeing a growth of close to around 9.5%, 1,136 crores, the mark that we're watching out for. EBITDA, that one's likely to grow higher than the revenue, thereby implying margin expansion, and most of that would come by on account of GST savings. So we're expecting margins to move higher to that 26% mark. The net profit should grow by about 23.5%. That is exactly what our poll is expecting. Close to around 176 crores on the bottom line is what we're working with. But that's as far as the frontline numbers are concerned. The results are expected to be better than the past because for Colgate, just like Unilever, we had the parent report their numbers and they said there was positive performance in India, and the company posted volume gains in both India as well as Philippines, led by successful launches of naturals products like Colgate Naturals and Colgate Swarn Ved Shakti. On top of that, we have a favorable base. Remember, last quarter we had the volume decline about 3%, which was the least that we saw across the FMCG space, and GST offsets will aid margin. So what are the numbers we're watching out for? One, volume growth. Volume growth of 5% to the 10% revenue growth. And most importantly for Colgate, irrespective of the volumes, irrespective of the reported numbers, I'll be watching out for whether they can arrest the fall that they're seeing at the company's market share, which is currently at least an 18-quarter low, has been declining for the last 8-10 quarters. So 53.7 is where the market share stands at. Let's see whether they can hold on to that. And if they improve, that is something that the street will like.
Okay, what about future retail?
Well, future retail, we have two estimates. Remember, the stock is again close to record high. It's moved 5 times in the last 12 months. In fact, from the start of 2017. So, as far as Morgan Stanley estimates are concerned, they're expecting revenue growth of 6%. For future retail, it'll be interesting to see what they do on the margin front. 23% EBITDA growth and 70 basis points increase in the margin is what Morgan Stanley is expecting. On the other hand, we have Edelweiss, slightly optimistic estimates out there, 8% revenue growth with a 30% EBITDA growth. They expect the margins to grow higher by about 80 basis points, and they're expecting the net profit to grow by about 64%. We'll keep an eye out on overall same-store sales growth, which is expected to be anywhere between 10 to 11%. That will be led by Big Bazaar, which accounts for 70 to 80% of their revenue. Everyday low prices is what will drive the Big Bazaar same-store sales growth. Remember, the revenue growth is much lower, 6 to 8%, primarily because in the base quarter they had Hometown, rather in the base quarter they had the Hometown business, which was demerged and which will make the revenue growth look weaker. Integration of Hypercity will also aid earnings, and Easy Day should become EBITDA positive only by FY19, so that is something we'll watch out for.
Okay, all right, Mangalam, thanks very much for that. Well, on to some more earnings then. Ashok Leyland reported what was a stable set of earnings on Friday that was slightly below estimates. The revenue was up around 34%, while the profit after tax increased by 40%. Sonia is back with us to tell us what she made of the numbers. Sonia?
Well, thanks a lot for that. You know, it was a stable set for Ashok Leyland. No surprises either way. The revenue growth, as you rightly pointed out, was about 34% in line with estimates. The EBITDA jumped up about 50%. They had a really good year. By the end of the year, you know, they put on weight almost to the tune of about 20%. If you look at the realizations as well, this time almost at 15 lakh rupees a unit. Discounting levels have gone down, so realizations have improved for them, up almost about 7% year on year. Yes, there was an increase in raw material costs as a percentage of sales that went up almost 90 basis points quarter on quarter to 71.9%. But the management has said that they will be able to manage it quite well as they head into the next few quarters. So raw material cost pressures is not an issue for them. They will be passing it on in terms of price hikes, etc. And they've also said that demand traction continues to be strong. Remember, so far the demand traction was good because there was an overloading ban in key states like Uttar Pradesh, etc. The management did indicate that even if the ban is relaxed a tad bit considering its election year, they still expect the growth to be pretty strong, especially in pockets like MHCVs, etc. So, good set of numbers and stable outlook by the management.
All right, Sonia, that's as far as Ashok Leyland is concerned. How about Amara Raja? I remember Exide had reported a strong performance on the margins. Was that the case with Amara Raja as well?
Unfortunately, it wasn't, you know, and that's why I expect Exide to outperform Amara Raja in the near future. Now, the numbers for Amara Raja on the top line were fine. It was a strong revenue growth that the company saw. The auto replacement segment has grown very well. Industrial batteries was a bit tepid because the telecom business was subdued, but the real pressure kicked in on the margin front. There was a 180 basis points quarter-on-quarter decline in gross margins. Of course, lead costs were higher, but lead costs were higher for Exide as well. They managed it by passing on the price. So clearly, you know, Amara does not have as much pricing power as Exide, and that's something I think could get factored into the stocks. Now, if you look at the margins for both, Amara this time lost 30 basis points in their margins year on year, while Exide's margins went up 80 basis points. So between the two, Amara could be in the red today, and perhaps Exide could outperform. Back to you.
Okay, all right, Sonia, thanks very much for that. Well, the week-long intense drama on the government formation in Karnataka finally reached the floor of the state Vidhan Sabha on Saturday, where B.S. Yediyurappa resigned as Chief Minister even before the floor test took place. Now, Congress leaders will meet and discuss power-sharing arrangement in Karnataka today. Sources say Kumaraswamy's oath-taking ceremony is postponed till Wednesday. Let's listen in to what the top Congress and JDS leaders had to say after all of the developments.
We have explained to the people in the BJP and the RSS that there are limits to your arrogance, there are limits to how you are trying to run this country. And I hope the BJP and the RSS learn a lesson from this, that the institutions of this country, the will of the people of this country, cannot be disrespected. You have seen openly right in front of you how the Prime Minister has authorized, directly authorized, the buying, purchasing of MLAs in Karnataka from our party and from the JDS. So the idea that Mr. Prime Minister spreads around the country that he is fighting corruption is a blatant lie. He is corruption. He is doing everything to subvert this nation, and he is doing it across the board. There are phone conversations of MLAs being attempted to be purchased by the BJP, and that is directly authorized from Delhi. So this is what I wanted to tell you. I am very proud that the opposition has stood together and defeated the BJP, and we will continue to do so.
No, I am not in a hurry. We are waiting for invitation from Governor House.
All right, so that was the drama from the Karnataka state elections. With that, we'll step into a short break, come back. 2 independent directors, they resigned from the board of Fortis Healthcare ahead of the crucial EGM scheduled tomorrow. More details once we're back.